You got the Fed decision on Wednesday. You got a very busy earnings season. Can anything derail the rally? Should all the bears, if there's any left still growling around, should they finally go in to hibernation? All right, let's ask Anastasia Amoroso, iCapital's chief investment strategist, who joins us here at Post 9. Anastasia, good to see you in person.
Good to see you, Brian.
On a Dow, 11 days. I mean, to what's happened? I don't understand what changed from 2 weeks ago.
Well, that's the point, is that not much has changed, meaning the technical backdrop is still absolutely constructive for stocks, meaning if we stay around these current levels, we're going to continue to trade above all the key moving averages. We're going to continue to trade above all the key CTA, commodity trading advisor thresholds, and that means there's no reason to sell. And that's what hasn't changed. There's not been a catalyst to sell. And when I think about this week, we go into just a monster week for central bank meetings. We've got the Fed, we've got the BOJ, we've got the ECB. But if the Fed does, in fact, deliver the last rate hike, that's supportive for stocks. And if big tech earnings deliver this week, that's once again supportive for what's been driving this market all year long. So not much has changed, but in this case, that's a good thing.
Well, we got a lot to you said a lot. We got a lot to unpack, that acronym soup with all the central banks. But let's go back to your first point, which is technicals and the CTAs. A lot of people, that maybe they're sort of vaguely familiar with these CTAs. Explain who they are and why they matter so much, particularly for short-term momentum.
Sure. Commodity trading advisors. So these are systematic investors that invest based on certain thresholds, and they chase trends. And so when the trend is positive, there's no reason to sell against that trend. So they stick with it. And if you think about CTs in particular, they were sort of the first, part of the market that catalyzed this rally, back in even before April. The reason was they're not very long stocks at all, but they were adding length. They were adding incremental beta exposure to the market. And as they did that, that kind of, took us higher. And then as long as CTs keep that length, as long as they don't sell, that's not an incremental seller to the market, and that's a really good thing. Now, you can't solely rely on that one player in the market, but it's hedge funds, it's retail investors, and I would tell you, Brian, that everybody is sort of in this chasing mode, and the animal spirits are back. I mean, the retail trader is back. We're not back to sort of the 2020 levels, but there's definitely some retail exuberance that's creeping back into the market.
We always talk about hawks and doves. You talk about CTAs. I know a few of them. They've got the attention span of another bird, a pigeon, meaning they will turn quickly. Right now, they're all long. They're all buying stocks every day because these technical levels. Do you anticipate these levels? We're breaking through some resistance. We're hitting whatever it might be. The short-term momentum to continue, but when it does turn, could they have the opposite effect?
100%, absolutely. For now, as long as we hold above these key critical levels, they're not going to be huge buyers in the market, but they're certainly not going to be sellers. However, you're right, Brian, if there is a catalyst that requires a sell, then you could have some significant selling pressure come from this particular pocket of the market.
How important is the Federal Reserve decision on Wednesday?
It's important, but I don't know that we're going to get any big, surprises from that. I think the Fed is going to deliver the rate hike because they sort of said they would. And, then they're going to probably deliver a hike and a hold because they also have this sort of propensity to want to do that right now because of how much they hiked in a short period of time. So I don't think we're going to hear that much new information. Fed Chair Powell.
You're supposed to ramp up the adrenaline and the excitement. Well, this is CNBC. Come on, you got to be like, it's going to be the most important Fed meeting ever.
Well, here's one thing that Fed Chair Powell may say that, will be kind of throwing back to the hawks, which is he may try to sound hawkish. He may try to say no cuts in the horizon. Maybe there's going to be more hikes because he does not want the markets to begin to price in rate cuts. So for that reason, he may sound a little bit more hawkish than maybe what people anticipate.
Rate cuts, we're there again. We're at that point in life again now where the rate cut was mentioned.
Yeah, but here's where I would anticipate, Brian, a potential for a surprise, and that is Bank of Japan. Nobody's really talking about Bank of Japan, but, the yield curve control is still there, which is 0.5% either direction. But by the way, inflation in Japan is 3.3%, well above targets, and it's been there for over a year. So to the extent that Bank of Japan surprises us to any extent with potentially widening the band, that could have a knock-on effect on U.S. Treasury.